All right, like promised, we're here for part two. It was such a monster, and I didn't I couldn't anticipate everything that I kind of got into last video. So here we are back again, and I actually did some trading myself based off of the revelation that I kind of just had unfold before my eyes. So what I did personally was I ended up selling some of my HUG shares. I had let's just say in terms of percentages, I had 100% of my gold, my gold in my tax-free savings account invested in ticker HUG, which I did find out that Horizon Horizon Gold is actually based purely off of futures. So, interesting enough, I just got a whopping education about an asset that I thought that I knew what I was doing. So, I figured out that right here, gold futures, HUG, there is 100% of my holdings was within the gold future platform. So there's always the risk to reward of any particular asset, but what's it say in terms of comparison of, let's say, the futures versus an ETF, there's no real fees within, let's say, the futures. So this is a lot more longing and shorting the price of gold, and the ETF, well, there's a lot more managerial fees. So there's going to be some type of fee associated with it. So sometimes that's a little bit of the difference or a discrepancy between the two there. So having that revelation, I found out that yes, the S&P Gold Index Gold, or GLD, is the biggest ETF backed by physical gold. So that being the case, I mean, that was actually a proportion what I did. I didn't sell all my HUG, but what I did was I basically sold half of it. I sold at least half of it, and then I put in a limit order for GLD, and I put in a limit order for actually CEF. So I decided to diversify my own personal gold portfolio. And not that I'm saying that you should do the same, but hey, I just kind of realized myself that, hey man, you weren't really practicing what you're preaching. So, I'm not here to try to tell people to do something different than what I want to do. So, looking at, let's just say, CEF, it holds 1.2 million ounces of gold and a whole bunch of silver. So, it gives you exposure to both gold and silver, and it's actually redeemable, right? It's trustworthy. It's backed by the government of Canada, and it's got a lot of different reasons that I like it. So this is actually confirmed, backed by physical gold and silver bullion. So this is a mix of gold and silver, so which I was fine with that. So I basically decided to allocate a portion of my HUG into GLD and also CEF. So instead of having, let's just say, for me, and this is just a preliminary kind of diversification, I might continue to diversify more, but I tried to call the TD web broker service, and they're all down. So before I had 100% in HUG, now it's about 33% HUG, 33% in a limit order for GLD, and 33% in a limit order for CEF. And this is just what I decided to do right now personally for myself. Instead of having it all within one asset, it's just a very important thing. Diversification is something you hear from everyone. So instead of just like, let's say we go back to hypothetically the marijuana market, instead of just picking one or two companies, you want to just get a spread between the whole. And usually that's always recommended by investors, to have a diversification even within a singular asset. So for me, I've decided that, hey, I realized that the gold ETF that I had been holding was actually primarily a future gold. It was an ETF based off of gold futures, Horizon, which I was kind of unaware. So how crazy is that? So what I've decided to do was not have 100% into gold futures, but I've reallocated it into ETFs that have been based off of more of the physical assets. So I basically split it between gold futures and two ETFs that were backed or mirroring gold bullion or silver bullion. So I personally kind of don't have too much within the streaming and gold mining portfolio, but that could be an addition. Right now, I didn't really play with my expendable cash, but what I did was reallocate my gold position to something that was a little bit more based off of the physicality of it. Now, for me, I don't hold any gold physically, but it's just tough to get. And I don't have a great storage facility. So, as much as I just went over how physical is superior, I think a close second would be an ETF based off of the physical well-being, especially one that is somewhat government backed and can be redeemable for the actual thing. That's the closest that you're going to get. Most of these other places, you have no guarantee that they're not going to just go bankrupt or they're going to just go belly up. So I think that was a good little research to kind of realize that, hey, for me, I want to have a little bit more diversity with this. So looking at this, yeah, the biggest one in the world, I mean, I could probably feel safe to have a small portion of my assets being in there. So I wanted just to go over that again really quick. This won't be nearly as much as what I did the first time, but you can see now my personal portfolio has got a little bit of diversification. So unfortunately, I'd have to say, I got about that much gold, could be something to change. ETFs is what I actually have a majority, let's say, in now. So let's say I have actually 66% in this and 33% of this. And I could possibly, plan to add a position into a gold mining or streaming company, but in my estimation, you shouldn't have 100% of any of your wealth in one specific thing. And I think we've just seen historically, physical gold bullion performs the best, and the limitations is just having to store it and to have to deal with it physically. So now the next best thing would probably be a gold ETF that is government backed and redeemable for gold and silver until it isn't, right? I mean, but at least they're putting on that facade, let's say, until everyone buys it and they don't have enough. But it's a lot better than, let's say, having assets that are a little bit more related to gold. So I think overall, most people don't realize that their gold ETFs aren't necessarily, they don't have any ownership of any physical gold. Realistically, they own assets related to gold. So in that sense, that's a very valuable thing to know. And you even go further and further away when you get into these gold streaming, gold mining, because really they're just companies, right? They're just companies, and the futures here has got its own little twist of the agenda, because it's not necessarily owning anything. It's just basically going off of people longing and shorting the gold market. So for me, like I definitely don't want to have 100% of my exposure to gold within gold futures. Now, even though it's performed pretty well for me, I'm just being honest, and I split up my allocation. I kept some in here because it has been doing pretty well for me, but I've already taken almost immediately from that discovery. I took out about 60 to 70%, immediately sold it for a profit, and now I got limit orders on GLD and limit order on CEF. And what I did for that limit order is I just basically looked at the 200 weekly moving average, and I put it around 130. So I got a limit order for GLD at about 130, and this is it's good to know what market I'm on, right? So it is American, so just be aware of that. It's an American one, and then the CEF, and there's a Canadian and American one here too. I put in another limit order around 1750, I think, or maybe 1730, maybe. I put it somewhere in here, and yeah, we'll see. We'll see if it comes down and touches and fills this up. But I think overall, having some exposure or some diversification is always beneficial. So yeah, that's what I ended up doing with my own personal finances. So yeah, I thought I'd at least bring that up and be honest about that. And yeah, I'm going to call this the second one, and we'll go on to a different topic. Thanks.